Hey everyone, welcome. Thanks so much for joining us. If you want to let us know where you are joining us from today, just please drop it into the chat. We have a bunch to get through, so I'm going to get started straight away. Firstly, I just want to acknowledge the traditional owners on the land in which we meet today. We pay our respects to their elders past, present and emerging, and acknowledge their spiritual connection to country. My name is Danny Pincus. I am part of the Blackbird team, and today I'm so honoured to have Michael Fox here with us. Michael grew up as a meat-loving Australian, but in 2015, he became vegetarian for health, environmental and ethical reasons. After 10 years riding the roller coaster of startups as a co-founder and CEO of fashion tech startup Shoes of Prey, Michael co-founded Fable Food Co. to help reduce people's meat consumption. So Fable launched in December 2019 in partnership with Chef Heston Blumenthal, and is now available in restaurants, retail stores all over Australia, the UK and Singapore, and also with meal kit subscriptions, Marley Spoon. So we're really excited today. Michael will be taking us through his journey and experiences as the former co-founder and CEO of Shoes of Prey, from realizing that the business wasn't going to work out, to team layoffs, to shutting down, and then his journey to recovery, reflection, and then launching Fable. So it's going to be a really awesome discussion today. We're going to jump straight into this presentation. So if you have any questions, please throw them into the Zoom Q&A function or into the chat function, and I'll make sure that we leave hopefully around 10 minutes to get to those questions. So I'm going to hand it over to you, Michael. Thank you so much.
Cool, thanks, Danny, and yeah, great to see you and connect with everyone. Yeah, as Danny touched on, I figured I'd kind of go through a bit of the Shoes of Prey journey with a particular focus on the kind of last sort of more challenging stages of shutting down that business, and kind of focusing on the lessons out of that, and sort of thoughts on building resilience and some of the other takeouts, and then how I'm applying those lessons at Fable. So for those of you who don't know Shoes of Prey, it was a fashion technology startup where you could design your own shoes. So you could go on the website, it's kind of design your own women's fashion shoes online, and then we manufactured them and delivered them to you. So three of us co-founded the business. We all met studying law in Brisbane. Jody and I, Jody, one of my fellow co-founders, and I were married when we started the business. Mike Knapp was a groomsman at our wedding, so we're all very close friends. We launched in December 2008, and initially we did really well in this creative niche of women who were really passionate about designing their own shoes. But about 18 months in, we were looking at our sort of website traffic data, and what we realized, we had basically tens of thousands of customers coming to the website every day, and not converting. Our conversion rates were really low. And so when we delved into that data, what we realized was, yeah, we're doing well in this creative niche, but we had all these mass market consumers who were coming to the website. They're clearly interested in designing their own shoes, but they weren't purchasing. So we did a bunch of market research to understand why they weren't buying. And what they told us was that there were three things. They loved the idea of designing their own shoes, but there were three things preventing them doing it. So firstly, they wanted faster delivery. So we were taking about 5 weeks from when you ordered to when you received your shoes. They wanted about 2 weeks because they were often designing for an event, ordering shoes for an event that was coming up. Secondly, they wanted lower cost. We were charging about a 30% premium for the same quality shoes, and they didn't want to pay that premium. And thirdly, they wanted a simplified shoe design experience. So at the time, it was a templated, but you were kind of designing from scratch. And what they wanted was to be able to shop an existing range of shoes and then make tweaks to those shoes. So we looked at those three things and we realized, yeah, we can deliver that value proposition, but we're going to need to raise capital to do it, because we're going to need to build our own shoe factory to speed up the lead times and lower the unit costs. There was no one else in the world who was making women's fashion shoes one at a time who we could partner with at scale. And then secondly, we needed to hire more software engineers and product managers and user experience people to simplify the shoe design experience. So we raised 2 seed rounds of funding initially, about $5 million in total. And that was from Blackbird Ventures, and Mike Cannon-Brooks was an early angel investor, and yeah, some other VCs that aren't around in Australia anymore, Southern Cross Venture Partners and some other angel investors. And so we used that sort of the money from those 2 seed rounds to embark on the journey of building our own shoe factory in China, and scaling up our software engineering team to meet the value proposition for those mass market customers. One little sort of piece of the story to add in here. So it was about 4 years into the journey of Shoes of Prey. Jody and I sort of realized that we were really good friends, we were really good business partners, but we weren't doing well as a married couple. And so we divorced at about the 4-year mark in Shoes of Prey. We'd sort of met at 20 and 21, got married at 24 and 25, and then by our late 20s, realized we'd sort of gone apart as a married couple. But we were very conscious of not damaging Shoes of Prey, and we had all these investors, we had all these employees. So we actually spent a lot of time working through, okay, well, if we're going to separate, how do we do that in a way that we can keep working together? We managed to do that. So we spent 4 years as co-founders in Shoes of Prey as a married couple, and then 6 years working together every day as a divorced couple. And even though we don't work together every day now, we still catch up every couple of weeks and chat. We're both remarried and have kids now, but still get on well. It was kind of a very sort of conscious process going through that breakup together. We wanted to stay friends and business partners, and we managed to work through that. So back to the actual Shoes of Prey scaling journey. So we were executing well on delivering that value proposition for the customer. We ended up raising an $8 million Series A round from Coastal Ventures out of the US, off the back of a deal that we'd done with Nordstrom to scale up our distribution in retail in the US. And it was at that point we actually decided the US had become our biggest market, so we decided to move our headquarters from Sydney to the US. We had a team of 25 based in Surrey Hills in Sydney, and we sort of went to everyone and said, "Hey, we're going to move to the US. Who wants to come?" And we ended up having 23 out of the 25 team members move with us from Sydney to Los Angeles, which was really kind of fun experience. And the other 2 wanted to come, but just couldn't quite convince their partners, so they kept working for us remotely from Sydney. We continued the scaling. We rolled out some design your own shoe experiences on the women's shoe floor in Nordstrom stores. The first one of those went well. So off the back of that, we raised a $22 million Series B round of funding to continue scaling. And it was probably about a year after that round of funding, we'd gotten to the point where we pretty much fully delivered on the value proposition that our market research said that mass market consumer wanted. So we were now delivering. We built the shoe factory in China. We're delivering shoes in actually 11 days from when you ordered to when you received your shoes, so under the 2 weeks. We brought our unit costs down, so we weren't charging a premium. It was for the same high quality shoes. You were paying the same price in a Nordstrom store or online from us. And we'd simplified the shoe design experience, so you could shop a range of shoes like any other shoe store, and then you could pick one of those shoes and tweak it. So much more simplified shoe design experience. So we delivered exactly what that mass market, or what our consumer research had told us that mass market consumer wanted, but we just weren't. Our sales had grown from when we raised the first seed rounds of funding, we're on about a 2 million revenue run rate. And then over the next 5 years, as we'd scaled up this value proposition, we're on about a $10 or $12 million revenue run rate. So we'd grown over the 5 years, but we were nowhere near where we needed to be. We needed to be at sort of 25 to 30 million revenue to be breaking even, because we now had all these fixed costs of a shoe factory in China and a software engineering team in LA. And we really should have been, if our market research was right, this value proposition was going to resonate, we really should have been at sort of 100 million revenue plus, but we're sort of stuck at about 10 or 12 million in revenue. And now we'd built the value proposition, we could see how consumers were behaving on our website. And what we realized was that mass market fashion consumer, when you ask her, does she want to design her own shoes? Yeah, she loves the idea of it, and consciously she thinks in her conscious mind, she thinks she wants to design her own shoes. But when you present that value proposition to her, deep down subconsciously, she actually doesn't really want to design her own shoes. She really wants to see what's popular on Instagram and in fashion magazines, and buy not only those popular designs, but even by the popular brands. And so that and your subconscious mind is more powerful than your conscious mind. So what she subconsciously wants is actually kind of the polar opposite to what she consciously wants, and is also the polar opposite to the value proposition that we built for the consumer. So our value proposition just really wasn't resonating for that mass market consumer, and that was challenging for us to try and figure out pre-building the value proposition, because no one else had built custom women's fashion shoe value proposition before, so we couldn't go and watch consumer behavior. But now we'd built it, we could actually watch consumer behavior and realized we got it wrong. So we were kind of a bit stuck. We were, well off break even. So we made a few attempts to pivot the business. We looked at a couple of other niche segments we were doing well in. So for example, extended sizing, narrow and wide widths, small and large sizes. That's actually a pretty big market opportunity. But it's too much consumer behavior and education that you've got to do to show people that they're wearing the wrong size shoes. So, and it's actually a really challenging problem to solve too. So that, for a bunch of reasons, that didn't work. We also looked to pivot into short run manufacturing, because we could make shoes very efficiently, one at a time, or in small runs. But yeah, we couldn't figure out a big enough market there. So we kind of hit the point where we realized, okay, well, we basically need to try and sell the business. So we went through a sale process. Ultimately, that proved too challenging as well. Our big issue there was for our size, we had a very complex business. We had a shoe manufacturing operation in China, making shoes one at a time, so more complex than a normal shoe factory. And then we had this fashion brand in the West that sold, was built around custom women's shoes. And trying to sell the business to a Western fashion brand, they generally don't own their own shoe factories, so they had no idea how to run a shoe factory. So some of them were interested in the design your own shoe and the brand, but they had no idea how to run a shoe factory. And then vice versa, there were some Chinese shoe factories that were very interested in the manufacturing, but they've got no idea how to run a Western fashion brand. So we looked at splitting the two parts of the business, and could we sell the two parts separately? But we had perfect customer and supplier risk on both sides of the business. So if you bought the fashion brand, there's only one factory in the world that can produce for you, and if the buyer of that business messes it up, then the fashion brand is basically worthless, and vice versa. So we ended up not being able to sell the business as well, which was really tough. So we hit what is probably for founders kind of our worst nightmare. We basically had to after 10 years, we had to shut Shoes of Prey down, and that was a really tough period, obviously, kind of 10 years of our lives putting into the business, all the big dreams. We'd grown to about 200 employees, so we had to lay off, and it was kind of, with all the pivots, we sort of laid off people slowly, because we were trying to make it work and lower our costs along the way. So it's kind of like ripping a Band-Aid off slowly. It was a pretty rough kind of 6 to 12 months for all of the team to go through, and for us as founders. And yeah, some of those team members were with us for 10 years. A lot of our headquarters team, 23 of them had moved to LA, and most of them were still with us. So they were close friends. They also had US visas tied to Shoes of Prey, which also made things challenging. There were a few things that we did through that period, which I think helped make that easier. It was still really hard, but we were very transparent with the team along the way, or at least as much as we could be. We were sharing sales targets, and it was clear that we weren't meeting them. So particularly our headquarters team understood, when we ultimately had to lay them off, it wasn't a big surprise, and they understood. So I think that helped. And we also spent a lot of time before the layoffs kind of planning out what it meant for people individually. So particularly for those with US visas, figuring out and giving them all the information on what they needed to do if they wanted to stay in the US visa-wise, or move back to Australia. Good, as generous as we could in the challenging situation, redundancy payments, and sharing them details of unemployment benefits in the US. And so I think that going through that preparation also helped make that process easier. But yeah, it was still a really tough period. And then, as well as the employees, having to tell investors that we weren't going to be able to return their capital. We'd raised $35 million and ultimately weren't able to return any of that to our investors. I remember making calls to Rick Baker and Mike Cannon-Brooks, sort of separate calls, to tell them that we'd lost their basically we'd lost their investment. We hadn't been able to close the sale. And kind of stuck in my mind, each of them separately, the first thing they said to me on those calls was, how are you? And it was a very deeply moving question to hear from investors who I'm calling to tell I've lost the millions of dollars you've put into the business. And then the follow-up question was, how's the team doing? So it was, really kind of empathetic questions from those investors, and I sort of made a note to myself that these are people I'd love to work with again in the future. A couple of my takeouts through that period. So one of the things I learned was resilience is like a muscle. I remember early on in the life of Shoots of Prey, we had a dispute with an accountant over $50,000, and I got really stressed about it. Like, this accountant was threatening to sue us, and as I had the experiences through Shoots of Prey, it's almost laughable now that something like that was stressing me out. But I think resilience is like a muscle. Like, you go through challenging circumstances and you build up the capacity to deal with those stressful situations. I think another thing that helped me through that sort of tough kind of 12, 18 months of closing down Shoots of Prey was just putting it into context of what can happen in life. Actually, during that shutdown process, my wife and I's first child, Elliot, was born, and so having a healthy baby, healthy wife, you'd rate that 100 times more important than actually having to shut down a startup. So just trying to go through the mental exercise of putting things into context. My family's healthy. I should be thankful for that, and that's something that's much more important than the challenging things I'm going through with Shoots of Prey. And so that's a couple of lessons on the resilience side that I took out. Two other lessons on the business front. We clearly got our market research wrong in Shoots of Prey. So I spent a lot of time reflecting on what we did wrong there and what I wanted to do differently next time. And I think, as I touched on it before, I think the challenge for us was that we couldn't watch consumer behavior because the value proposition didn't exist. So I kind of said to myself, whatever I do next, I want to pick something where I can actually do my market research by watching consumer behavior rather than just asking people what they're doing. And then probably the second big business lesson for me was that whatever I did next, I wanted to be really passionate about both the product and the mission. I wasn't particularly passionate about women's shoes as much as I tried to be, there's not really a mission around fashion. We tried to build a mission around passionately creating happiness for people, but ultimately fashion, really, if you dig down into it, it's trying to convince people to buy stuff that they really don't need, and it's not necessarily good for the world. So I kind of said to myself, all right, whatever I do next, I want to be passionate about the product and do something that's actually good for the planet. So I finished up with Shoots of Prey 2.5 years ago, and I'll just do a couple of minutes on where that, a couple of minutes on Fable, but just focusing on where that journey with Shoots of Prey has taken me. So finished up with Shoots of Prey 2.5 years ago. I needed 6 months off after that. So my wife's Danish. We went over to Denmark for 6 months. Took a break. Our second child was born over there, so I spent a lot of time being a dad. Really wasn't even consciously thinking about what I wanted to do next, but just ended up doing a lot of reading about different areas that interested me. I'd gone vegetarian. I've been vegetarian now for 5 years, so I was about 2.5 years into that when I was in Denmark. So I ended up reading a lot more about industrial animal agriculture and just got very passionate about the idea of wanting to help contribute to ending it for all the same reasons that I'd gone vegetarian. Initially, I didn't want to do another startup. So we moved back to Australia 2 years ago after the 6 months in Denmark. Initially thought I didn't want to do another startup. I kind of probably, almost had a mild version of PTSD after that period of shutting down Shoots of Prey. My confidence was down. So I talked to a lot of, but I wanted to go into the meat alternative space. So I talked to a lot of the startups in the space and bigger companies entering the space, and basically wanted to get a job in that category. But the challenge was everyone was a startup, or the big companies, had like half a person working on it internally. So there were really no jobs. No one, maybe if I was a food scientist or something there would have been, but no one had a role for a washed up entrepreneur. So I kind of had a choice of either, do I go back to somewhere like Google where I'd been working prior to Shoots of Prey, something I'm maybe not necessarily as passionate about, Can I convince myself if I want to do meat alternatives, I'm going to have to start a business because there's no jobs. So managed to kind of convince myself, all right, I'll start a business. In doing that, I'll meet anyone else in the industry I've not met before. Maybe a job will come up, or maybe the startup will go okay, and then I can make a call at that point. And so, co-founded and what turned into Fable. And just very quickly on Fable, basically the kind of produce delicious meat alternatives made from mushrooms. Taking some of the lessons from Shoes of Prey, I spent a lot of time watching consumer behavior in this meat alternative category, like literally going and standing in Coles and Woolies and watching how people shop meat alternatives, creepily standing behind them, watching what they pick up off the shelf and put back down, what they pick up, put in their shopping basket, and then even more creepily talking to them afterwards about what I'd watched them doing to try and understand their behavior. And one of the things I took out of that was that a lot of consumers wanted more sort of minimally processed whole food based meat alternatives. Unfortunately, that kind of aligns with my diet. I'm vegetarian, eat a very minimally processed whole food based diet. And so ended up wanting to go down the path of producing a meat alternative that kind of fit with that diet. So started exploring mushrooms as a base ingredient as opposed to textured vegetable protein, which most meat alternatives are made from. Through that, that exploration met my two co-founders, Jim and Chris, who are both, Jim's a chef and mushroom scientist, Chris is a mushroom farmer. We ended up co-founding Fable. And it's really genuinely ticked all the boxes of what I was looking for. This is what I would want to be doing if money didn't matter. If Shoes of Prey had been successful and money didn't matter, I'd want to be doing what I'm doing now. I just thoroughly enjoy it and very driven by the mission. And then it's been a real thrill to be able to take the lessons from Shoes of Prey and apply them in Fable. We're only 14 months in since launch, but so far it's going really well. Month 10, our revenue was the equivalent to about where we got to in year 6 or 7 in Shoes of Prey, the monthly revenue. So we've been able to scale up much more quickly. That is a big part of the function of the kind of lessons I learned doing Shoes of Prey the first time. And, as much as the experience of shutting down Shoes of Prey was horrible, I'd never want to go through that again, never wish that on anyone. It was probably the period in Shoes of Prey where I learned the most. And I probably wouldn't be in the position that I am now had I not have gone through that experience. So there's silver linings in having gone through that. Took those lessons and it's kind of worked out nicely. I think I've gone over my 20 minutes, so happy to answer some questions.
Yeah, we've got some great questions. So what resources did you use to mentally prepare yourself for the end of Shoes of Prey?
Oh, that's a tough one because there's tough one because there's not really a lot of people. There's not a lot of people who kind of write about that experience because most of the startup blogs and things are. And I found this too. I was writing a blog early on in Shoes of Prey when things were going really well. When things are positive, you want to talk about it and you feel more open to sharing it. But when things are going badly, people don't tend to write about that as much. And so it was tough kind of finding resources online. It was more just talking to other people. It is obviously very common for startups to fail. So I think some of our VCs were really helpful because a lot of the companies they invest in fail. So they've been through those experiences and watched and gone through that and worked with founders through businesses that are struggling. So I think talking to our VCs who'd had experience in it had helped. And then, I had a few other founder friends who'd gone through similar experiences. So they were really helpful to talk through the process. It was more conversations with people rather than kind of being able to find resources online.
Cool. So we've got one here from Richard from July.com. And he said he loves the Shoes of Prey story. Did you ever consider OEM shoes for other Western shoe brands since you own a high quality shoe factory?
Yeah, we did. And that was part of the kind of attempt at a pivot into short run manufacturing. That was kind of looking at that for OEM manufacturing for other brands. There are a whole bunch of challenges in it. Unfortunately, our cost base was a little bit higher because we were not mass producing 10,000s of pairs of shoes at a time. So that made the pricing made the sale process harder. We thought there was a value proposition in there because, yeah, fast turnaround, short run manufacturing to be able to adapt to consumer demand. In theory, that should work. But just the sale process was long, and we didn't really have the runway to work through that sale process. And it was just so different to the way the market and the industry operates at the moment that, yeah, we just really struggled to get traction in it.
Awesome. So this is just in your opinion, is it ever possible to downsize again to serve a niche rather than mass market?
Yeah, I mean, I think in hindsight with Shoes of Prey, we probably could have built a good sort of successful but smaller scale business. It shouldn't have been one that was venture backed with the benefit of hindsight. Like, I think that niche we were serving of the creative, passionate customer, we grew to sort of 10 million revenue in that niche and at decent gross margins. So had we have just focused in on that niche, grew more slowly, done a little bit of expansion into, we probably could have got some traction in short run manufacturing had we had more time and extended sizes. We probably could have built a $30 million business serving those niches. One challenge was the manufacturing side. Like, we really did there was really no one who was doing custom women's shoes at scale. So we would have had to build our own shoe factory to serve that segment of the market. But had we done that more slowly, we probably could have done it more cost effectively. And yeah, maybe just raising a few $1 million from some angel investors, we might have been able to build a good, successful, profitable niche business. But yeah, we thought there was a bigger market opportunity. We decided to go down the venture route to take that on. And yeah, that then made it very difficult to sort of, go back and focus in on the niche.
So it's kind of similar or related to what you've just spoken about, but you made some pretty big decisions off the back of some market research, like setting up the factory in China. Do you think there was a level of confirmation bias in analysing that data? And how would you have tested your hypothesis if you had the chance again? So kind of similar on the same vein, but perhaps some more detail.
Yeah, in hindsight, huge confirmation bias. I mean, we had this belief that consumers wanted custom women's shoes. We went out and did our market research. It came back, women in the mass market want custom women's shoes. It's like, yeah, we've nailed it. We're on the right path. Then, I mean, a lot of confirmation bias. To be fair, we did try and test that with experts in the market. So David Jones in Australia and Nordstrom are the biggest retailer of women's fashion shoes in the US. They thought the concept would work. Although with the benefit of hindsight, it was a mix of, it was probably us who convinced them, because, we were running a sales process with them to try and get into their stores. We figured that, all right, we'll run the sales process. If this value proposition, if they think it's not going to work, they'll tell us. They were totally bought in. They even invested in the business. So we had the biggest retailer of women's fashion shoes, thinking it would work too. But yeah, we weren't actually doing market research with them. We were doing a sale process. So that probably in hindsight, did bias the results there. Yeah, could we have done anything differently? I mean, my biggest learning is watch consumer behavior as opposed to asking customers. And so that's the focus of our market research in Fable. We still do obviously talk to customers and ask them, but ideally after we've watched how they behave and seen the decisions that they make, so that then we can draw out any unconscious or subconscious decisions that they're making. Yeah, if you're building a value proposition that doesn't exist, I still don't really have a perfect answer for how to do that market research if you can't watch the consumer behavior. But yeah, I guess my advice, and if I had to do that again, I'd just be much more conscious of really going deep on the market research, trying to understand the psychology of the customer and trying to approach it with the opposite of confirmation bias, questioning everything. And yeah, we didn't do a great job of that in hindsight at Shoes of Prey.
Cool. I absolutely love this question. So being thankful for all the good things in your life is a great resilience tool, which you've shared. What other techniques do you use today to help keep you grounded in your new endeavor?
Yeah. So for me, I think I grew up in Queensland. Holidays are always at the beach. There's something about the beach for me that is just deeply relaxing, meditative. Have a swim in the ocean. I just feel like a new person. So when we moved back to Australia, we ended up living on the Sunshine Coast, and we're renting a house. Literally, the beach is 150 meters that way. I swum in the ocean, particularly not traveling in 2020. I swam in the ocean almost every day. And yeah, just that 10 or 15 minutes at the beach in the ocean is just a real, you know, starting a startup is, you know, even with Fable, you know, it's going well, but there's lots of challenges, of course. It is stressful. So yeah, for me, living near the beach and being able to go to the beach is a massive one. And actually, with Shoes of Prey, we had the office in Santa Monica. I lived at Venice Beach, so I'd go down like at 6 a.m. in the morning and just sit on the beach for half an hour on some of those really tough days, having to let people go and everything else. And that just helps sort of ground me. So yeah, finding my meditative place helped. That was another big one.
Awesome. Well, that's all the time we have with you, Michael. It's always a pleasure. We absolutely love having you as part of the Blackbird founder community. And just thank you so much for sharing your journey and your advice with us so openly and honestly. We hope everyone joins us next week for our Next Giants Weekly talk, which will be on SaaS trail conversions without developer involvement. So that's with Funnel Ventures, Audrey Melnick. And you can register for those sessions through our website. Thanks again for joining us, Michael, and thanks everyone for taking the time to hear this session. Bye.